Hello and welcome to this tutorial. This is Casey. It's been a while, but I am back. Now, a couple of days back, a friend of mine reached out saying, why do you keep on talking about investments that give less than SACCO? You talk about money market, which does around 8, 9, and 10, while SACCOs are doing 15. And that was quite provoking because it clearly made me understand that most people don't actually know how this computation is done from the SACCOs. So you only see 15% and that's what you go with, and you believe that that's exactly what your SACCO gives, which is quite incorrect. It's partially true, but it's also incorrect. So the question here is, where do SACCOs derive dividends and interest? Let's first of all tackle on dividends. What are dividends? When you become a member of a SACCO, you automatically become a shareholder of that cooperative. The money you contribute to the SACCO as a shareholder, the key word here is as a shareholder, is referred to as share capital. Now, let's just step back and maybe shed some light on this specific statement. When you buy your shares from Safaricom or Equity or a Nairobi Stock Exchange, you would find that the moment you pay a number of shares, then you become a shareholder of that company. This is the same what happens with SACCO. So each SACCO has a minimum requirement for the number of shares a member must purchase. Okay, unlike Safaricom, you can only have 100 shares and you still become a shareholder of Safaricom. But come to SACCO, they actually give you a specified number of shares for you to purchase to be an eligible member. And that is usually tied on the benefits on why you should be joining the SACCO in the first place. So, for instance, Motor SACCO, this is fictitious. Please don't go Googling around trying to figure out where Motor SACCO is. Now, Motor SACCO demands that you buy at least 50 shares at 500 per share, which translates to a minimum investment of 25,000. That is 50 multiplied by 500. So if this is the requirement of this specific SACCO, whereby you have to buy 50 shares to be a shareholder, which contributes to your share capital of 25k. So this is what you're required to do. Now, the return on investment that a shareholder receives from share capital is commonly known as dividends. So the 25k from Motor SACCO is what actually gives you dividends. Therefore, assuming the 15% you receive from Motor SACCO was computed against your share capital. So that means your dividends for the year will be 15% of the 25k that you have as share capital. Now, we'll tie this together in a moment. First of all, let's go to monthly contributions. This is your monthly contribution a member pays towards the SACCO. The amount contributed can either be used as security to a member loan or a guarantee to other members. And this is the game in the SACCOs. That's why you hear people talking about, come, I introduce you to the SACCO so that you can guarantee me in other things. Now, your monthly contributions, which in most cases they will never have a limit, your monthly contribution earns you interest. So, quick summary, share capital earns you dividends. We will see in the next slide the differences between your share capital and monthly contribution. Let's do the quick comparison between share capital and monthly contribution. Now, share capital qualifies you to be a shareholder. Now, monthly contribution contributes towards loan or guarantee. Share capital, we've seen, earns you dividends, while monthly contribution earns you interest. Share capital has a cap. You have maximum shares, right? So, in the example of Motor SACCO, it gives you a maximum of 25k. Monthly contributions has no cap, but of course requires you to contribute a minimum amount of cash. But if you do 1 million, 20 million, it's up to you. And at the end of the day, it earns you interest. Share capital is non-refundable but can only be transferred. If you are in any of these groups, in the Facebook and other places, you'll see people selling their shares of 25k at 18k, 20k. That's because they are not refundable. They want to exit the SACCO, but they cannot get their money back. So the only way they can exit the SACCO is by selling to another shareholder in that specific SACCO. So if you are joining, you may be lucky to find somebody selling 25k at 20, at 18, 17. I've seen some weird price, some weird quotations people are making. And of course, it's all about understanding. If you feel like you want to exit the SACCO and you need your money, then you have to take that route. The other thing about monthly contributions are refundable upon exit with an asterisk. The reason why it has a condition is because you may be having a loan, so you cannot get your money out until you clear the loan. The other aspect of your exit can be on hold is because you've guaranteed someone. Unless you find somebody to take over the guarantee, then you will be able to get your money back. Share capital cannot be used as loan security. The 25k which has made you to be a member of the SACCO, you cannot use that as a security for your loan. Whatever you contribute in the SACCO, that becomes security to the member, loans or guarantee. Now, I'll give you an example here, which has happened to most of the SACCOs. You'll find that the 15% is computed against the dividends and the monthly contribution is calculated against the interest. I am in one of the most SACCOs, which actually shows me the computation of dividends in a separate table and the computation of interest in a separate table. So let's summarize all this together. For example, if you maxed out on share capital of 25k and you've contributed 150,000 into the SACCO will calculate the 25k against 15% share capital and 150k against 11% of your monthly contribution. And this is where most people get lost. So if your friend tells you my SACCO gives me 15%, why should I not go with other options? Just ask this individual, are you talking about share capital? Are you talking about interest? It could be true. Maybe the interest of the monthly contribution is 15%, but to be honest, most will have a split of share capital, usually on the higher side, and then the other contribution becomes on monthly contribution. I hope you understood, and thank you so much for coming back again. See you in my next video where I will show you the calculation of dividends and the calculations of interest. Thank you.